Hello. Hello, guys. Welcome to the stream. Hope you're all doing good and hope you're not going to take any trades or engage in any trades today. Today, we have a US bank holiday, so it's not a trading day for me. And I thought, okay, we'll spend this time in a quality manner and thought of giving some education. So, if you have any doubts or if you want to know something about a specific topic regarding ICT, please let me know. I'll feel free to share them. Welcome, guys. How was your week so far? How was your week so far? Let's have some interactions going. How was your week so far? It's not gonna be a trading live stream, so if someone is here for trades or something, it's not gonna happen today. We'll come on. Yes, Friday is tomorrow, right? Yes, tomorrow we'll be having a trading stream. If at all there is a setup, I'll take a trades. 9:30 distribution. Balaji, bro, it is not that simple, bro. I'll just give you a template. This stream will be in English, guys. Also, people from other, global audience will be here. If it is a trading stream, I know people from our community will be there. But since this is an educational stream, if it is being reviewed by the team, I'll get caught. So this will be in English, guys. Don't take me wrong. IRL to ERL model entry in FEG target on dual. What do you call this model, bro? If the model named IRL to ERL, can you explain? So, okay. Okay, first let's talk about IRL ERL because credits to MMXM Trader. He has really made it very simple. ICT has touched on that in a surface level, but MMXM Trader has given a complete view on how do you use that and how do you look at that in higher time frame and how do you combine that with entries. So complete credits to MMXM Trader for like making it that simple. So basically every ICT trader knows that markets moves from inefficiency to liquidity and vice versa. So this is how markets move according to ICT. And algorithm is the tool or vehicle that is moving price from inefficiency to liquidity and liquidity to inefficiency. See, I might be wrong. I'm not consuming any of ICT's the content right now, but this is just my understanding of what I've learned from ICT. This is my comprehensive view on ICT. Basically, market moves from inefficiency to liquidity and liquidity to inefficiency. And algorithm is the one, according to him, IBDA is the one which is moving price. And there are a lot of algorithms, but he called it as IBDA. And what MMXM has trader has did is that we have. Let me pull some path tool. It should be where. Okay, it should be around here, I guess. Where is the path? Okay, you will use this line. There must be path. Wait. Path. It's here. Okay. So we have a let's say we have a clean dealing range. Dealing range. What is a dealing range? Dealing range is when price sweeps a high and when price sweeps a low. That's gonna be our dealing range. So dealing range, we here have this as our dealing range, and I'll use this. So we have a clean dealing range, and the main factor which drives price is that higher time frames, inefficiencies, and liquidities. But which drives is, we call it as an order flow. Basically, we have two types of order flow. It would be a bullish order flow and bearish order flow. And when price is in bearish order flow, price would break the lows and price would reject all these highs. Price would break the lows, reject highs. So when market is in higher time frame bearish scenario, or market is in higher time frame bearishness, price usually tries to reprice into some sort of higher time frames inefficiency, and that inefficiency we call it as IRL. And then when price gets into this, create some sort of SMR there, price would again reprice to this external range liquidity. So internal range liquidity is basically, which is the liquidity which is being pending inside the dealing range, is internal range liquidity, and the extremes of your dealing range, which is highs and lows, is your external range liquidity, and vice versa. When price sweeps external range liquidity, it will reprice into the internal range liquidity. Maybe uh, according to where price has tapped, it could completely get into the opposing side's liquidity as well. So this is basic explanation of what is ERL and IRL. So when there is a dealing range, that's your external range liquidity, higher time frames external range liquidity, price reprices into this internal range liquidity. And when price is at a bearish scenario, price would make an SMR here, and it would target all these again external range liquidities. So this is internal range and this is external range. This is external range, and that's your internal range liquidity. So speaking about 9:30's open, I usually trade 9:30 openings. Either it would be manipulation, or I anticipate 9:30 move to reach my drawn liquidity. I'll combine it with where the price has been in terms of previous day, Asia, London, and pre 8:30 open. I mean pre 8:30. That is your yearly New York session. So what I'll be expecting is, if let's consider some scenarios. This would be the same for bullish and bearish. It would be like vice versa for bullish and bearish. When price is at a bearish scenario, let's say price has been trending lower. We have our 8:30, like we have, this is our 8:30 open. Let's consider we have our 8:30 open. So that's our 8:30 open, and whenever at 8:30 open, it price manipulates into some sort of internal liquidity. I'll speak it in terms of IRL and ERL. Okay, this is your lower time frames ERL, and that's your higher time frames IRL. When price manipulates into something and your direction is bearish, when there is an SMT or something, and when price is giving a displacement just before the 9:30 open, I personally will expect 9:30 open to reprice into that initial lows. When we have 8:30 open, post 8:30 open, price manipulates into something which you believe is the SMR, and then you see some displacement lower, and that I'll consider with L model, and then I'll be looking for sales, and with that sales I'll expect price to reprice into the drawn liquidity. In this case, that's a drawn liquidity. Maybe something would have been here. That's the drawn liquidity which I'll be looking at price to reprice at 930's open. This is the same for a bullish scenario, and I'll just come to the bearish scenario. When 930 open, I mean price extends aggressively at 830 open, and price has tapped into some drawn liquidity. Even though price has formed a lows, taking this drawn liquidity, I will not consider buys immediately. I'll wait for 930 to manipulate, form a low again with some sort of SMT, and when there is a displacement, I'll try to enter and capture all these buy side liquidities. These are the pretty common scenarios you could be looking at 930. 930 could either distribute into a uh, liquidity pool or drawn liquidity, or it could manipulate and then it could reprice in. So you'll have to find whether 830 what 830 has been doing in order to anticipate what 930 will be doing. 830 opening is very crucial in terms of anticipating what 930 is going to do. I guess you've got the answer. I basically trade 930s. I love 930s. I'll try to either capture the original manipulation move, or else I'll try to capture the the Judas after 930. But I love capturing 930 expansions. I'll try to position in just before 930, and then I'll try to ride, because that 930 move will be the manipulation move most of the time, and that will like give me TP very quick. I really love, even though like it's almost like double the size of 930 post expansion. Let's say this, I mean that would be like double the move after 930. This is your 930 manipulation, and if that's, I mean that's your real expansion post 930, I will still favor capturing this tiny 930 because it is aggressive. It's kind of aggressive, and also like gives you a lot of, I mean, confidence if you are in such trades. I don't like trades retracing too much, consolidating too much, and that will happen after 930 is open. At 930 open, that would be immediate push towards either sides of your drawn liquidity. If your drawn liquidity was right, that's gonna give you some clean, quick TPs, and I'll be done with that easy. IRT, okay. Do you have any accounts with Fires? I can't talk about other prop firms when I'm being here, bro. Sorry. If you want to consider firms to trade either FX or crypto, you can consider CFT. Why I'm asking is this, because I trade only the 950 macro, but I want to find how does 930 expand occurs. See, yesterday, okay, yesterday I'll share you. Like yesterday, there was a pretty clean scalp. Like that's my textbook scalp. Okay. So price is consolidating. That's another factor in itself. I'll just go to daily. I'll break down yesterday's price action. Okay. I'll just break down yesterday's price action in terms of my model. With respect to my model, you can say. We'll not consider any higher time frame bias. Okay. We'll not consider any of that. We'll just see how 930 has delivered things right to our TP. Okay. So we have this, and we have this. I'll also, okay, I guess it's all set. Okay. Where was that? Where was that? Okay. We have it right here. Wait. Okay, we have it right here. And if you look at price, okay, if you look at price, we had all these bearish pressure. Just with the data here, you can see that just with the structure, you can see clearly that, and we don't want this. Wait a minute. Okay. Okay. So just looking at the structure here. Okay. Just look at what 9:30 has been doing. I mean 8:30 or pre 9:30 has been doing. Just looking at what a 5 minute time frame, you can see this in the watermark right here. We had this displacement, so that's our dealing range highs to that's our dealing range lows, and we are around 50 percentage of the range. And also we had this clear liquidity sweep right here, and you can see that price has been breaking all these lows and closing below all these lows, and the highs has been rejected, or any inefficiency that is being repriced into is being rejected. I am not sure if there is an